Hello, everyone. Ladislas Maurice from the wanderinginvestor.com. So today I'm really excited about the topic that we'll be discussing, which is Russia and Russian equities, which are quite a unique investment thesis these days. So I have two experts on board today. So one, I have Lyall Taylor, who is well known for his blog LT3000, which I really highly recommend, and also Swen Lorenz from undervaluedshares.com. Gentlemen, how are you?
Very well, thanks. Thanks for having us on. A big fan of your YouTube channel, so it's great what you're doing. So yeah.
Thank you.
Good morning, both of you and everyone, and very excited that it's the three of us. I think this is a very interesting setup. I love reading both of your blogs, so let's see what we come up with today.
So when we think of Russia and Russian equities, the main narrative that we have in Western media is that it's a country that hasn't undergone any reforms. It's a country that is entirely dependent on oil and gas. It's extremely corrupt. It's a country that is in terminal decline. So that's generally, and it's a threat to the world, et cetera, blah, blah, blah. So that's generally the main narrative that we get out of mainstream media, whether it's more on the left wing, right wing. It's always just that big Russia, big boogeyman, and it's not the sort of place where you want to invest money. Now, I talked to the two of you, and you both don't quite completely agree with that narrative. So I'll start with Lyall. So Lyall, from a macro point of view, why Russia? Why now?
Yeah, all very good questions. Like I think that the issue with Russia is, I mean, it goes all the way back to the Cold War. Right? There's a history of distrust between the two nations, and I think that sort of already creates a sort of foundation of misunderstanding. But really, I think what Russia really is, or the way I see it, is actually a country that's still ongoing a transition from totalitarian communist regime to a more sort of capitalist and democratic system. Now, obviously, it's still very it's still a very incomplete transition. But if there are steps forward, steps back. But if you compare the country to where it is today compared to 30 years ago, it's had a profound level of change. And I think that what originally got me interested in Russia was there was a big crisis back in 2013-14 after the Crimean incursion and the crash in oil prices. And whenever a sort of an explosion goes off, I always think it's a good idea to sort of run towards it, and just at least have a little bit of a look, because sometimes there are opportunities that come out of that. And I was frankly quite surprised, what I found. Like one of the problems with narratives is that, especially narratives that seem very plausible and obviously true, is that you often don't look for actual evidence. You don't feel like you need to look for evidence. But one of the great things when you actually go and start looking at companies and actually looking at it from a bottom-up perspective, you will often find evidence that will conflict, or sometimes find evidence that will conflict with the narrative. And what I was actually pleasantly surprised with what I saw. And there was a lot of reforms going on, corporate governance reforms in SOEs. Some of the companies were actually quite well run. There's improving capital management, improving transparency, and there actually had been quite a lot of reforms going on. And I sort of got the impression, certainly, no, it's not all petals and roses, but it definitely didn't live up to the negative narrative. So that's what piqued my interest originally. And I'll let Swen offer some comments if he wanted to.
Yes, I think, Lyall, the word transition that you used is the key phrase here. I think with regards to Russia, we live in this very polarized world now where everything is always either black or white. And I think there's a lot of gray now in Russia in a very good way. To start with a personal anecdote or some background how I've come to shape my views on Russia. I first went there in 1998. This was at a time when you still had Russians queuing up at McDonald's because it was like the latest thing to arrive in Russia. It was at the time of Yeltsin, extraordinary political instability, entire companies being stolen from the government by people who are now oligarchs, and the security situation was absolutely dreadful. It was actually genuinely scary to venture into Russia, and all of that has changed completely over the last, to a large extent over the last 2 decades. One statistic that I always like to quote because it goes, it dives right into the commonly known narratives about Russia, is that of the alcohol consumption, which has halved in the last decade. So the Russians were always known to drink way too much and to basically drink themselves to death. They had awful life expectancy in the 1990s. Men, on average, lived only until the age of 57, and alcohol and violent death was the main reason for that. And fast forward to today, the life expectancy of men is now up at 68, I believe, at last count, and alcohol consumption has been halved, which was also very much a result of the government educating people and rising incomes. As people enter the middle class, they become better educated, they have more to live for. So there are a lot of factors here at play that have changed aspects about the country that we think we're familiar with, but we're not really. And when you look at the economy, obviously the most often repeated narrative about Russia is that it's all commodities based. It's basically oil, gas, certain base metals that you need, and just basically it's all commodities based, and that obviously then goes up and down in rather extreme cycles. And that's not true anymore. Yes, there is a very significant part of the Russian economy that is based on commodities, but they've diversified way beyond that. And as Lyall already said, governance has improved as well. You now have web high-tech companies and internet companies listed on the stock exchange in Moscow and also internationally. And last but not least, to make one, I think, very important point, much as the West, or many people in the West, like to talk quite negatively about fossil fuels, I think what we are heading into now is a period where the world will not have enough fossil fuels because production, no one wants to invest in production anymore in the West. And we still need fossil fuels for much longer and to a much higher degree than we think. That's why prices have risen so much already of oil and gas. And who's the biggest beneficiary of that? Russia. They can produce oil very cheaply, gas very cheaply in extraordinary quantities. And they're not suffering under this, what I always describe, political madness of the West, where you have to reduce fossil fuel production before you have the replacement ready. It's fine to replace it, but get the replacement first. So Russia is benefiting from a lot of factors, and that's why I'm much more positive about it.
Yeah,
I can. Sorry, go ahead.
Yeah, just to add a few numbers to what you gentlemen just mentioned. So in 2010, Russia was ranked 124th in the ease of doing business ranking by the World Bank, and in 2019 it was in 28th place. It's a massive jump, and that doesn't come without substantial reforms. Also, in terms of the World Economic Forum Global Competitiveness Report, it went from 67 in 2013 to 43 in 2019. And to continue with the dependence on oil and gas, in 2015, oil and gas represented approximately 50% of the government budget. And in 2021, it's going down to about 38%. So huge reforms. Russia is changing relatively fast, actually. And that statistic you mentioned concerning life expectancy of men in Russia, when you take into account the amount of time that Putin has been in power, essentially for every year that Putin has been in power, Russian men have gained about 5 months of life expectancy. That's a pretty impressive result.
Yeah, I completely agree with all the Swen's remarks, and I think bringing up life expectancy is actually a very good one, because this is a very objective metric. You know what I mean? Like there's a lot of narratives and emotion that flies around, but it's pretty hard to deny that there's been some meaningful positive changes, even if not across all dimensions, across at least some. And just to touch also on the point, why is there a perception that Russia's a sort of stagnating, declining economy? I think that a lot of what's going on here is that cyclical factors are being mistaken for structural factors. So if we go back to the first decade, of this century up until the global financial crisis, the Russian economy was booming. It was growing at 6, 7, 8%. And of course, it was an honorary member of the famed BRICS back then, the must-have, high growth emerging markets. and the market was flying and valuations were high. And incidentally, a lot of people say that valuations have always been cheap in Russia. That's actually not the case. It was certainly a much more expensive market back in 2007. But what we've seen over the past decade is all of the tailwinds in the first decade have turned into headwinds. So oil price, instead of going from $30 to $140, it's gone from $140 to 50 and below for a period of time. You had huge inflows that turned to outflows. You had an FDI boom that turned to FDI money leaving. They've spent much of the last 6 or 7 years deleveraging after after some of the sanctions post Crimea. The Russian government's been running very tight fiscal policy, paying down debt, and the Russian government actually has very close to no net debt whatsoever at the present time, and only ran modest deficit last year, even during the sort of recessionary period, back to surplus this year. The central bank has also been running very, very tight monetary policy. So Russia is actually now running about a 5% current account surplus, even with energy prices, where they've recovered a bit, but still by no means high by historical standards. So there's been a lot of these headwinds. And maybe the final one worth mentioning too is that the population was shrinking. It's stabilized now, but the working age population was shrinking over the past decade. And much like Japan, the numbers, the GDP numbers are a lot less flattered when you don't have immigration and population growth. But they've been undertaking pension reforms. They've pushed out the pension age, very painful but necessary reform. And actually, the country is likely to have a modest increase in the working age population over the coming decade. So there are a lot of those headwinds now after sort of a decade of these factors that are probably going to be turning into tailwinds. And I think the extent of the structural decline and the reforms that have been going on, all that sort of narrative, I think, has not separated out a lot of these cyclical factors. And actually, from a structural perspective, there has been real ongoing continuing improvement through that period, as evidenced by things like life expectancy and ease of doing business rankings.
Yeah, to add to that, I sometimes wonder whether to some degree, there's now envy playing into the whole narrative as well. As Lyall just mentioned, they have a surplus in government, and I believe the national debt is equivalent to about 15% of GDP. There are Western European countries that have almost 10 times as high a level of debt relative to GDP. And Russia is in a very strong position financially as a government in terms of being in control of its own fate. And when you look at the fiscal policies and the debt ratios of many Western countries, you have to say, where would you rather invest in a country where debt is almost a complete non-issue, and the government has now a 2-decade track record of controlling that very, very well. I could see some people getting envious of that. And also, I believe, if I'm not mistaken, Russia still has a flat income tax. It's one flat rate for all. It's 15%. So this is not a bad place to live or do business under, these when it comes to the factors that I just mentioned. Of course, there are negatives, but there are also quite some surprises. So a document that I read with amazement and that greatly amused me a while ago was about the increasing interest of the Chinese in Russian heritage brands. And I'm saying this in the context of the owner of LVMH having just become the 3rd richest person in the world. Obviously, LVMH is the company that owns all these French and European heritage brands, which has become an extraordinarily successful company over the last 30 years. And now suddenly the Chinese are discovering that Russia has a lot of very interesting heritage that you can tap into to create consumer products and services that become very successful. And this ranges from, Russian architecture and some Russian ecotourism destinations and certain Russian events becoming very popular with Chinese and other tourists. And some fun instances such as suddenly Russian ice cream is quite a thing. So I was at a dinner in London recently where the host pulled out Russian ice cream and everyone was astonished and loved the stuff. And there's a certain Soviet nostalgia in there because it's ice cream without all the chemical additives, without all the crap that you nowadays put in there. And Russia has an endless amount of stuff of raw material to play with in regards to that as well. So I see a lot of positive surprises coming out of Russia in the next 10 years. And there's certainly ways how investors can make money of that, definitely.
Yeah, I agree. Russia is really not your typical emerging market play. It's completely different. It's not a Brazil, it's not a Turkey, it's not an Indonesia. It's a country that exports a lot, that is now food independent for the first time since the breakup of the Soviet Union. Russia became a net food exporter in this year. So that's a big change. It controls its finances. Russia really controls its own destiny and also has a lot of talent in terms of STEM. Let's not forget the Soviet Union heritage. So very strong talent in terms of science, mathematics, and now IT, etc. So it's a country that really is strong on so many levels. I mean, the West loves to talk about Russian cyber attacks. That doesn't come without talent, if the claims are true. But that's another topic. So from a macro point of view, okay, but now macro is good, but what about why equities? So why play equities? What makes Russian equities attractive? So Sven, you did quite a bit of research on the matter. Can you elaborate why you think there are interesting opportunities there for investors?
That works on several levels. For a start, Russian equities have always been known to be cheap, relatively speaking, when you look at them on a price-earnings ratio level or price to book or dividend yield. And that has been changing, especially over the last 2 years. We've seen a huge influx of retail investors, domestic retail investors, buying Russian stocks. The interest rate they receive on bonds or on deposits held with banks have been decreasing, and suddenly they've discovered that actually our domestic stock market has a lot of very interesting companies, household names, companies that they trust, that pay extraordinarily high dividend yields. And there has been an extraordinary wave of, I think, in total, 12 million Russians opening brokerage accounts in the last 24 months. And pumping some of the $500 billion that they have stashed away in savings accounts, pumping that into the stock market, which has lifted valuations. But they're still cheap. And I'd say the Russian equity market is so interesting for us to speak about today because of 3 factors, really. It's dividend yields, first and foremost. That remains I think the most attractive way to play the Russian market, or the most obvious way in any case. Then I would say there's definitely a surprising number of tech-related companies to look at, and a little bit further into our talk, I'll have one that we should speak about specifically. That'll probably surprise people. There's some real growth stories out there, and again, coming at valuations that are much more attractive than what we have to pay in other countries, and seeing how these highly valued Chinese tech companies have been getting absolutely clobbered the last 2 days. I think some people are now remembering that valuations is a factor to look at after all. And then I think there is also simply a factor of the ongoing transition of Russia, and quite possibly there will be a multiple expansion over the next 3-5 years because more Russian domestic money, at least, is flowing into the market. That is also inspiring foreign investors to come back because the market is getting much more stable and broader, and you'll have less extreme cyclicality when it goes down because there's a domestic retail investor base to buy into the market. We saw that last year in March, actually. So these are some of the factors that I believe make this a very interesting market to look at. And in terms of undervalued companies, which is really my main subject, it does feel a bit like shooting fish in a barrel. I mean, almost everything over there is cheap. You have to be selective for other reasons because of things like governance. But this is a market that ranks among the world's most attractive in terms of valuations. And at a time when valuations are pretty crazy everywhere else, maybe that is a good time now to look at it.
To emphasize the point you mentioned about local retail investors investing in the market. So there were 4 million retail accounts on the Moscow exchange in early 2020. And by June 2021, it had gone up to 12 million. So massive, massive increase. So Lyall, you run a fund in Singapore and you have
Actually, if you wouldn't mind, if I could just add a few comments to Swen, because I completely agree, but I think it's worth emphasizing this point, because this really is what makes Russia so attractive, I think, from a stock investment point of view. And you know, one of the key things with investing is that capital is most valuable when it's most scarce. And we've seen around the world, you know, central banks are printing money, and you know, there's an excess of liquidity everywhere. It hasn't found its way to Russia to any meaningful extent. In fact, to a large extent, it's actually been leaving some of the sanction risk and a lot of the perception. So you're in a situation that's a lot more akin to sort of the early 1980s from an asset valuation standpoint in the West. And really, you know, the two things that really drive equity returns, a lot of people think, you know, in emerging markets, what you need is high growth, you know, high GDP growth. It's actually a combination of valuations and returns on capital. There's actually historically been a slightly negative correlation between equity returns and GDP growth, which would surprise a lot of people, but that's because, you know, high growth is high expectations, high valuation. It also predicts a wave of more money coming in, more investment, which tends to compete down returns on capital. So what you get in Russia is you get not just low valuations, but you're also getting very high returns on capital, and you're getting companies that, you know, often have extremely high levels of international competitiveness, because the ruble by any metric is extremely cheap. So most companies across all kinds of industries, from steel to fertilizers to gold to, you know, are sort of first decile of the global cost curve. So, you know, you're getting high returns on capital, and you're actually getting surprisingly good. It varies, of course, by company, and there are still some laggards in terms of corporate governance reform. But generally speaking, the capital management, dividend payouts, and things like that are actually not so bad. So that is the cornerstone of what makes it attractive. The macro story is much brighter, as we talked about, than is generally perceived. But really, it's the valuation, I think, that makes the Russian market a particularly interesting place to look for ideas.
So Lyall, you say this, but you actually put your money where your mouth is, and you run a fund in Singapore, and approximately 30% of your assets under management are in Russia?
Yep, that's right.
What's your exit strategy?
So firstly, yeah, it's a global, opportunistic, unconstrained mandate. So it's a relatively small fund, and we just go where we think the opportunities are. And, you know, at the moment it's in Russia. It might be somewhere else in 10 years. It probably will be. But yeah, we're at 30% just for all the reasons discussed. In terms of exit strategy, the way I sort of think about it is you don't really need a catalyst or an exit strategy if stocks are cheap and paying good dividends. You know, like I think catalysts are for stocks that, you know, maybe that, you know, there's bad capital management or poor governance, but there is a lot of asset value there, or companies that are maybe they're relatively cheap, but they're not necessarily great, you know, long-term sort of buy and hold investments. But when you're buying, you know, good quality companies, you know, yielding 7-8% that are actually growing, I don't think you need an exit strategy. You can just earn sustainably, so long as the valuations don't go up, you can just earn sustainably higher returns off the dividends and earnings growth. But I think what eventually will happen, I would prefer if it didn't, but a combination of what, you know, Swen talked about in terms of the increasing domestic participation in the market. There's a perception, a widespread perception, that there's no catalyst because the foreign money is never going to come back to Russia. I think never is a long time, and I think that it will eventually come back. But even if that doesn't happen, Russia is a net exporter of capital to the world now with a 5% current account surplus. And as you go along the trend of declining inflation, interest rates coming down, you will see, just like it's happened in any other country, increased domestic participation in the equity market. And we're already seeing clear signs of that. So I think, you know, I think that we're already moving in that direction with some ups and downs, of course. And I think that's going to continue. And my exit strategy would be if valuations were no longer as attractive as what, you know, risk reward compared to other things, I would move on.
To your point, Lyall, when one looks at the share of securities in total household financial assets as a percentage, Russia stands at 11%, Turkey at 14%, the UK at 17%, and the US at 54%. So obviously no one's expecting the Russians to invest like Americans, but that it would start to join countries like Turkey and the UK, it would not be surprising, especially with all the developments happening there in the market. Sven, do you have any input as well?
Since we just mentioned dividends and dividend yields so often, I think I should just briefly put some flesh on the bone and mention some concrete figures so that everyone who's watching this has a clearer idea. So the average dividend yield of Russian stocks right now is about 7.5%. And the average dividend yield in all emerging markets around the world is 2.5%. So it's higher by a factor of 3. And to top this, if you actually dig into individual stocks, which Renaissance Capital, one of the investment banks and brokerage firms in Russia, has done recently, they've compiled an overview of the top 40 dividend stocks in Russia. That list basically starts with dividend yields in the 12, 13, 14%. The top 10 on that list were all in the double digits. And number 40, the last one on the list, still had a dividend yield of above 6%. I'm not saying all of these stocks are great in the sense that this is like a sustainable dividend that you could expect every year, but it just goes to show you the insane level of yield you can get by investing into Russian stocks. And if you choose wisely, then there's definitely money to be made just waiting for valuations to go up. In the meantime, you get very attractive dividend yields.
Yeah, because there's been a huge surge in the dividend payout ratio. In 2011, it stood at approximately 15% for Russian stocks, and now it's at almost 60% versus an emerging market average of about 35%.
Yes.
And it's been really driven as well by the government that's been pushing Russian companies to give money back to shareholders.
Let's just say clearly that they've been gently pushed in the sense that the government provided leadership by implementing dividend policies for government-controlled companies. And then it started to become popular by way of competition and other factors, and probably a little bit of gently pushing among privately controlled companies as well.
Yeah, that's my perception as well. I mean, basically the Russian government has now requested that state-owned enterprises pay out 50% of the net income as a dividend, and most of them are complied. There's still a few stragglers here and there, and still some turf wars going on. But generally speaking, that's been the direction, and I think it just speaks to that improving, just the general improvement in corporate governance and capital management. Like, you're seeing more and more companies in Russia model their disclosures and capital management on Western best practice. And it is surprising. Like I say, when I first started looking at Russia back in 2014, that was not what I was expecting to find. And I've just been pleasantly surprised. It just continues to get better and better. And I think this is a significantly overlooked thing. So it's one thing for stocks to be cheap. You know, you can have low multiple stocks, but they can have low dividends, or they can have poor governance, or they can be, they're not paying anything out. It's quite another thing to find really good companies that are actually paying dividends, sometimes even buying back shares, etc., trading these kind of valuations. So yeah.
So Sven, you're the expert in finding undervalued shares. You said you wanted to treat us with a few names.
I think I'll give you two names that are companies that anyone can look up and also easily invest in, and that I think will also just simply be a good example of the scope, the choice that you have among Russian companies. The first one that I just have to mention, and in a way it's the boring one, but it's oldie but goldie, it's Gazprom, the world's largest gas producer, which is a Russian company. It is still state controlled. I've been reporting about it extensively for the last 2 years. The stock has doubled in the meantime. I would say Gazprom is worth a look for the following very, very simple reasons. Europe continues to rely on gas from Russia, and as Europe currently in its ESG in the new fashion of ESG investing, as it reduces its investment in fossil fuels and it doesn't have replacements ready yet, I think Europe will just continue to rely, if not even more than in the past, on energy imports from Russia. And on top of that, now Russia has built a pipeline to China, and might even build a second pipeline. So this tremendous gas reserve that Gazprom sits on is being utilized by just selling it off to very lucrative foreign markets. And the projected dividend yield of Gazprom next year is currently standing at an incredible 12%. I'm yet waiting for these figures to play out. I've looked into them. They're entirely realistic. There are always some variables, obviously, the short-term gas delivery price, etc., etc. But even after doubling in value, Gazprom stock might still have a dividend yield of 12% going forward. I've seen one bank estimate as high as 14%. So if you want something that is very simple in the sense that it's a business model that everyone can understand, the stock is traded in a very liquid fashion on several markets around the world, then look no further than Gazprom, tuck it away for the next 3 years, 5 years, 10 years, and you'll probably do very well. And the other company that I think I would like to put in front of this audience is Tinkoff Bank. If you want to look it up on the stock market, it's actually called TCS Group. It's listed on the London Stock Exchange with a market cap of about $15 billion. And it's a so-called neobank. It's a bank that only exists online. They don't have branches. And if you measure it by the number of clients they have, they are actually the world's largest online bank, incredibly enough. It's coming from Russia. It's got a very interesting history where it started as a provider of credit cards and debit cards and has by now expanded into all sorts of other areas of banking, retail services of all kinds, might even do stuff for small and medium enterprises. And it's an extraordinarily well-managed company to come out of Russia. And if people are interested in fintech, as many are nowadays, then Tinkoff Bank TCS Group may even be a benchmark to look at, in the sense that some of its metrics are actually much better than companies that are promoted in the West as the next best hot thing when you compare them on a like-for-like basis. To just briefly mention one figure, so Revolut in the UK is strutting around with its average deposit of, I believe, $840 in an account, and Tinkoff Bank has $340, which on the surface looks like it's lower, but when you compare it in terms of the available incomes in these countries, Tinkoff is actually much more successful at getting a higher part of the income of its clients into its banking system. And there's one video that I highly recommend anyone to watch who's researching Tinkoff Bank. It's their strategy day it's the investment strategy day in April this year. It's a 3-hour video. It's quite long. It's fascinating to watch, and it'll give you a whole different perspective on the quality of companies that are available in Russia to investors. In terms of valuations, it's not super cheap. It's gone up 4 times over the last 18 months, like everything else in the online space. But if you look at the earnings estimates for 2023, 24, you're getting a price earnings ratio that's gone down to the low teens, maybe to 10 even. Yeah, that's just one headline figure, but it's not actually that expensive, and it's an extraordinarily good company.
Thank you, Sven.
Yeah. Yeah, I'll just echo those comments. They're both stocks that I've owned for a while. I've owned TCS since I think late 2016, and Gazprom since about then. And so absolutely agree that they're both very good investment opportunities. That Gazprom dividend yield, by the way, is on a 50% dividend payout. So, one of the big stories there has been the corporate governance reform. It's still ongoing. There's still some improvement, but there's been radical improvement. It used to be a very, very poorly governed company, but some of that value is starting to get unlocked. I might add on TCS as well. It's worth checking out the podcast the CEO Oliver Hughes did on the Invest Like the Best podcast with Patrick O'Shaughnessy. It's an excellent podcast. It was done earlier this year, and I think it will give you a flavor of just how well run some of these Russian companies is. And I think your audience will probably be surprised to learn. It's probably may even be the best run fintech company in the world. So there are some really great. This is just in terms of stock it is from my end. I mean, one of the great things about investing in a market that's sort of secularly cheap as compared to a lot of markets these days that are secularly expensive is that you don't really have to be that. You don't have to poke around in really unusual corners of the market. You can really just look at the largest, highest quality companies and already find some pretty good ideas. So Gazprom is one of them, but like something like Sberbank, which is the largest incumbent bank in Russia, it's one of the best state-run banks in the world. It's got about 40% of the retail deposits in the country, very, very strong banking franchise. They've made a lot of forward-thinking investments in technology and their core banking systems. So they're well prepared for the more digital future. And really, Tinkoff and Sberbank are really the only major players at the moment emerging in terms of innovative and tech-savvy banks. And you can buy that business. It's got very low leverage, very conservative risk weightings. In a lot of countries, mortgage risk weightings are sort of 10, 20%. They're 100% in Russia. They're thereabouts. Don't quote me exactly, but very conservative risk weights. And you can buy this business at 6.5 times earnings. They pay out half of their earnings as a dividend. And it's not a complicated story. You just have to be able to get past the Russian discomfort factor and the geopolitical kind of headlines. But really just on a bottom-up perspective, unless anything goes absolutely catastrophically wrong with Russia, which for the reasons discussed on this podcast, we don't think is going to happen. I think an investment like that will do very well. And I would also recommend having a look at just the major oil companies, as well as Gazprom, just like Rosneft, Lukoil. These kinds of companies are also very attractively valued, trading at sort of six times P, maybe even at spot, even closer to 5 times earnings. And long reserve lives, very low costs, a progressive tax regime for the oil industry. So there's somewhat less sensitivity to the downside. Just some really solid value in that space as well.
We've been saying a lot of positive things about Russia, but try to balance things. What's the biggest risk?
I think probably the biggest risk by far, it would depend on, it would be specific to the individual investor, what jurisdiction they're in. But the biggest risk by far would be sanctions or an executive order that prohibited certain investors from holding certain stocks. So we saw, for instance, Donald Trump passed an executive order late last year that banned US investors from holding certain Chinese companies like China Mobile and a handful of other companies. So US institutions and US investors are actually forced to divest, or they are forced to divest by a certain date. It is possible something like that could be done for Russia in general. It was done or threatened to be done with one company called Lyall a few years back, although they backed down from that in the end. So this is not a risk that would affect countries that are less likely to engage in that kind of aggressive sanction. Really, it's a big risk for US investors and US citizens. The relationship between Europe and Russia is a lot better. There's a lot closer, trading ties between the two. But I think that the impetus to sanction Russia has been easing. I think that the geopolitical focus is turning more to China these days with the US. And with Trump out of office now, there's a little bit less of a need for Russia to be sort of political football. So it's sort of no news is bad news. No news is good news in that respect. And we're starting to see less aggressive rhetoric, and that the sanctions we have really been seeing since post-Rusal have really just been targeting certain individuals rather than entities or listed companies. But that is a risk for some investors to be aware of.
The two of you mentioned oil and gas companies and banks. What about the risk of Russia being banned from SWIFT? Because that would be really tough on oil and gas. They would have to rework their whole payment systems, and then the banks as well being cut off from SWIFT would be an issue. Well, so how would this impact your investment thesis?
Sure. I mean, one of the advantages Russia has, it's such a large exporter of oil and gas that it can't practically be sanctioned in that respect. So, if it's Iran, you can cut off, the world can do without a couple million barrels of oil. But I mean, Russia produces 11 million barrels of oil a day, and it supplies 2/3 of the European Union's gas. So it's simply not feasible for sanctions of the nature that you've seen in places like Iran be implemented. And I think with SWIFT, I think there's a lot of reluctance to go that far. But if they did do it, Russia has actually been making preparations for that risk. They've actually also divested, I think, most of, if not all of their US dollar reserves. They've switched to other currencies. So they have made preparations. I personally think it's very unlikely to happen. And the trajectory of relations is actually improving. Like I said, the relationship with Europe is a lot better, and the current administration is less prone to sort of unilateral action. So I don't think we will see that happen. But it is something I think Russia would be able to manage it, but it is something to monitor.
I'd second everything that Lyall has said and add to it that maybe the three of us, or the two of us, Lyall and I, we sit in a bubble and other people may not catch up that fast. I think it's always worth keeping in mind that established narratives are there for a reason. They're being driven by powerful media and all sorts of special interest circles. And it could well be that the perception of Russia just simply stays as bad as it is for many years to come, never mind all the changes on the ground. We could be talking about this in the same fashion on YouTube in 5 years, and nothing much has changed. But I think with the dividend yields being paid along the way, valuations being low, and the locals waking up to their domestic stock market, I think that risk is also taken care of, in the sense there's no downside. So I see a lot of upside and not that much downside, and that's really what attracts me to a market.
Yeah, and maybe if I could just add as a final comment there as well. I mean, often emerging markets are associated with currency risk. People say, what about you taking, you're buying rubles and all that sort of thing. Well, it's really important to emphasize that the Russian central bank is extremely hawkish and conservative, and they've actually been hiking recently. They've hiked from 4% to 6.5%, saying there's some initial signs of inflation, and we want to get ahead of it so that we don't see the anchoring of inflation and risk having to do more in the future. And I'm sort of reading this and thinking, it would be nice if some of the Western central banks were sort of thinking and behaving in this way. There's actually arguably a greater degree of conservatism in fiscal monetary policy. In fact, I don't even think it's arguable. I think it's demonstrable in Russia at the moment. So I actually think, the West is not without macro risk. The West could have an inflationary cycle, could have much higher interest rates, and that could cause all kinds of carnage. I think that the advantage of somebody like Russia is they've already been battle hardened and battle tested in several serious downturns. So there's a lot of the excesses have been wrung out. There's been deleveraging. House prices haven't been going anywhere for a long time, and they've started to go up recently, but the yields are still 8, 9, 10% in many cases. And so because of that, there's actually a very low level of I think currency risk and economic and macro risk in Russia, but particularly because the ruble, as mentioned earlier, is very cheap in my estimation. So it's not like, people like to group emerging markets into a bucket, but the reality is that they're all very, very different countries with their own idiosyncratic risks. And in Russia's case, I actually don't think the macro risks are high at all. I think that it's one of the lowest risk economies from a macroeconomic perspective in the world right now.
Yeah, in many ways, Russia is anti-fragile. And
yes,
the whole leadership has essentially restructured the country around this idea of anti-fragility. Gentlemen, thank you very much for your time and for your insight today. So a few points: to access Russian stocks, a lot of them are listed in the US, in London, in Frankfurt, and to have access to the Moscow exchange, usually the easiest way is to simply open an account with IB. There is an affiliate link below, and I really encourage everyone listening to this podcast to do a few things. So one is to go onto Lyall's blog. He comes up with a blog post once in a while, not very often, but when he does, it's an intellectual pleasure to read through your analysis. So LT3000, the link is below. Lyall is also a fantastic follow on Twitter. His handle is below. And Swen, who has appeared a few times on my channel, I always recommend his newsletter. I keep telling him, raise your price, raise your price. It's $49 a year. You get, I think, 10 to 12 in-depth reports on unique stock ideas from around the world. And you said you'd be coming up with more content on Russia. So for people who are interested in this topic, there are going to be some interesting reports coming through. Also, the link to undervaluedshares.com is below. Gentlemen, thank you and have a lovely summer.
Thanks very much.
Thanks to both of you. It was great. Bye.